Bang! Welcome to Cryptocurrency Blockchain News, a cryptocurrency blockchain aggregated news show on YouTube. There's going to be drinking. There's going to be smoking. There's going to be swearing. You've been warned. So look, here I come. In 3, 2, 1. Bang! Welcome everybody. Black, white, gay, straight, Christian, Muslim, Jew. Welcome. My name is Shomari Clarke. Welcome to Cryptocurrency Blockchain News. You are now about to witness with your very own eyes. Greatest show on earth. Greatest show. Yes, in the multiverse. Bang! Greatest daggone show in the daggone multiverse. Bang! We have a great show for you today. Oh, baby. Look, it's great to be with you all today. And look, Bitcoin is flying. Portfolios are looking nice. And we're going to talk about that. But before we get into that, the crypto is looking nice again. Could we be in for a bear market? I think so. But let's talk about what we're going to talk about first. And then we'll get into the market overview and yap and have a little celebration there. Okay, so story number 1 is Solana is going to offer real-world asset stablecoin on Solana. We're going to talk about that. I don't know if I said that right, Solana. We'll see when I get to the thing. All right, and then the UK is offering a new crypto bill which is going to provide regulatory clarity on what these assets are, how much they're taxed, blah, 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 blah. In other words, fully legalize the crypto industry. We're going to talk about that. And that relates to the last story we're going to talk about why are the hedge funds coming to crypto? Hedge funds are coming in now. Yeah, why are they coming to crypto? And it relates to that second story in that there is now regulatory clarity. Like I've always told you on this show from the beginning, once there's regulatory clarity, then the institutions will arrive. Right? They can't come here and buy this crypto, unless they know the legal status of it and blah, 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 the tax implications and everything, right? So we're going to get into that, and we're going to show you why the hedge funds are coming to the crypto space, which is great for us. That's the big money. The big money. We're soccer mom and dad are tapped out now. The retailers are tapped out. We need institutional money, big money. All right, so we're going to talk about that, and big money is coming, so don't worry about that. And then we're going to get to the shout-outs and daily summary as per usual. So it's great to be with you all today on this fine day. I think we're above 72 grand, 72K on the Bitcoin when I looked about an hour ago. So, well, let's just proceed how we proceed, and we'll see where we're at right now. Let's go. Bang! That's how we start with a little bit. Bang! And then we head on over here and we do a little bit. Bang! So where are we at? Price of Bitcoin is $72,066. And when I left you yesterday, we were at $69,843. So we have gone up. We've gone up 2,200 and I don't know, something like $25. $2,225 up in one day. Bang! Those are the kind of gains we like. Those are the gains. All right, those are the gains we want. That's perfect. Today, the JOLTS job numbers came out, and everybody knows that so now everyone knows that the Fed Reserve is going to, is going to lower interest rates. So that helped today's nice run. All right, hold on a second. I forgot my lighter. Hold on. All right, we're back. All right, where were we? So, yeah. So great stuff. Accumulate now while you can, because as the central banks continue to lower interest rates, that brings more money into the markets. The institutions leave safety assets, bonds, and precious metals, and they come into what's called a riskier asset. So they go what's called a risk on, right? And so it means they're deploying more of their clients' money into the space, into the market, into riskier assets. So stocks, crypto obviously is the riskiest, derivatives, options, all this other stuff instead of just bonds and precious metals, gold, silver, blah, 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 like that. And so they're moving away from the gold and silver. And I know what you're saying, but gold is at all-time high, Shomari. Yeah. But that's due to hedging against the lowering of the dollar. You see, as we lower interest rates, the dollar is going to get weaker, right? Which is good. And so whenever the dollar gets weaker, gold goes up, right? It's just how it works. People use gold as a hedge against too much dollar inflation. And so anyways, though, so now more money is starting to come into the markets in general. And obviously it's going to spill over to us here in crypto. Now, institutions like hedge funds and family offices and banks and everything, they buy investment vehicles. And so you're probably wondering, like, well, why isn't my shit going up? Because these guys need investment vehicles to come get it, right? Like, hedge funds aren't going to just buy Ethereum and just hodl it like that, just have a bunch of Ethereum for their clients. No, they're going to buy it through an investment vehicle like a futures contract or a swap or an option, right? Which gives them leverage. Yes, the voodoo, right? The leverage. And so we need leveraged investment vehicles to be made to really open up this space. So that's all coming. And so it's great. And so let's celebrate today. Accumulate while you can, folks, because things are looking good. All right, so let's do how we normally do. Top 10 of the day, brothers and sisters. You know who they are? The usual suspects. Top 10, Bitcoin, Ethereum, Tether, BNB, Solana, USDC, XRP, Dogecoin, Tron, and Toncoin. Let's see let's look at market moves of the day. Single digits up to single digits down. Single digits up to single digits down. Who's that? Litecoin with a 9. Oh, no, that's only, sorry. Single digits up to single digits down. Single digits up to single digits down. Single digits up to single digits down. 2 single digits up, 2 single digits down. All right, let's see who lost money today. If you see anything here you like, go get it because it is on sale. See what we're working with. Bang. Oops, I meant burn. There we go. Top 10 losers. Caspa, cat in a dog world. Ave, Brett, BitGet, Token, BitSensor, Notcoin, BNB, Toncoin, and Monero holding on the number 10. Let's see who made money today. Bang! Top 10 gainers. Oh, these gains aren't that much. Still less than single digits. But anyways, better than nothing. Top 10 gainers. Aptos, first near on Ethereum. Popcat, Conflux, ApeCoin, Mogcoin, Pendle. Let's see. Pendle, Ondo, Chainlink, and Fife Network holding on the number 10. All right, let's look at top 10 in volume. Let's see where the money went. So volume means where did the money go today? In other words, where did the money go? I can't really explain it any better. Right? Volume doesn't mean just buying or just selling. It's both. So volume means activity. So which blockchains had the most activity today? Obviously the stable coins because they're stable coins, but let's look at the non-stable, right? Focus more on the non-stable coins. So obviously Tether and then Bitcoin was number 2, Ethereum, USDC, First Digital USD, Solana, Dogecoin, BNB, and Sui. All right, let's look at the total market cap. Total market cap is $2.43 trillion. And when I left you yesterday, we were at $2.37 trillion. So we have gone up $0.06 trillion. All right, let's look at volume. Oh, yeah, baby. Bang! Bang! That's the volume you want to see. Anything over 100 billion, that gets Shomari happy. Oh, yeah. That gets Shomari happy. Yes, now we're talking. Now we are talking. We are back in the game. So $113 billion. When I left you yesterday, we were at $86.5 billion. So we have gone up massively, the market, obviously. Boom. And so what that shows you, if volume was high and prices went up, There were a lot of buyers, And so we have gone up, and we are up $27 billion over yesterday. Bang, bang, look, bang, bang, look. All right. Perfect. Bang, let's get to the stories. All right, well, let me have a sip, man. Daggone, beautiful. 113 billion? That's the proper numbers. Those are the days, right? Those are like 2020 days, right? Fuck, it's been so long since we've been up over 100 billion. I got 100 billion. That's the sweet spot. That shows you shit's going down. All right. Oh, Solaire. Oh, I forgot the R. That's why I pronounced it so funny. Okay. So story number one. Solaire launched USD, a user-friendly real-world asset-backed stablecoin on Solana. So this is a onboarding for Solana. So Solana hodlers, bang! Solaire is a first-of-its-kind RWA-backed stablecoin on Solana. Unlike traditional stablecoins pegged to fiat, SUSD offers a decentralized alternative. Right, it says they're going to use real-world assets rather than... So do you know how stablecoins work? So how stablecoins work, most of them is, they buy U.S. treasuries. They buy bonds, right? So if it's a UK stablecoin or a American stablecoin or any stablecoin from anywhere in the world, how they work is they buy treasuries, right, called bonds, and they rotate them, right? They buy short-term treasuries, lots and lots and lots and lots of them, and they keep rotating them. That's how stablecoins work. And they buy enough treasuries and sell enough treasuries minute by minute to try to keep their stablecoin pegged. It's called pegging, pegged to the currency that they're sort of representing. So if you're an EU stablecoin, you're buying and selling European Union bonds to keep your stablecoin pegged to the price of the euro, right? Same thing with America. If it's a USD stablecoin, you're buying and selling treasury notes, you're buying and selling bonds every day, all day, in and out, all day, to keep the price of your stablecoin the same-ish, right, to the price of the American dollar, right? So that's how they work. And so these guys, they're not going to use, they want to do something else. They're not pegging it to a fiat, to real money, to actual currency of a country. It looks like real world asset backed. So let's see what that's about. I haven't read this either, so when I read this to you, it'll be my first time. So let's see what these guys are talking about here. But that's how stablecoins work. They're buying and selling bonds all day, every second, buying and selling bonds to keep the price of their stablecoin pegged to the national currency in which their stablecoin represents. All right. So, Solaire, a Solana-based staking platform, launched SUSD, a synthetic stablecoin backed by real-world assets, on October 29th to offer a decentralized, user-owned alternative to existing stablecoin. User-owned alternative. All right. So unlike traditional stablecoins, which are pegged to a fiat currency held by a central authority, a central bank, SUSD is backed by a basket of low-risk assets such as treasury bills and government bonds issued by the United States Department of the Treasury. Anyone with $5 can access tokenized real-world assets, starting with the U.S. Treasury bill, now live on Solana. Oh, well, that's the same thing as all stablecoins. All stablecoins do. This is what I just explained to you, right? Low-risk assets, which are bonds, right? And they buy and sell them from the Department of the Treasury here in America all day. So I don't know why they're making their thing, because this isn't special then. I thought this was special. Right? They all do this. They all buy treasury bills. I just said that to you, right? U.S. Treasury bill. All right. Okay, so anyways, though, so the U.S. Treasury bill is the first asset onboarded in partnership with Open Eden, a tokenization platform that offers a tokenized U.S. Treasury product with an A rating from Moody's. In the future, Solaire plans to onboard other low-risk real-world instruments, such as oil and gold. Oh, okay, that's what makes their stablecoin different. They're going to use oil and gold in it as well, which is new. They're calling, other low-risk world instruments. Oil is not necessarily low risk, right? Gold is a low-risk asset. You use it to hedge against the dollar, and when you're risk off, you buy gold too, right? Along with bonds. But oil is not low risk, especially with the fucking Arabs and the Jews over there just blasting away, the Israelis blasting away at each other right now. That ain't fucking, oil is not a low risk asset at all. I mean, it's not high risk. It's not like buying, fucking mortgage-backed security on a credit, or a credit default swap or something, but I wouldn't consider it low risk. But that's just my opinion. Anyways, look, a decentralized approach to RWA-backed stablecoins using Solaire's non-custody request for, quote, marketplace, SUSD allows users to mint and redeem directly without relying on centralized institutions. Oh, the users are allowed to mint these coins? With a minimum entry point of $5, anyone can access a SUSD and earn a portion of the yield generated by the underlying RWAs. This yield is automatically distributed in USDC, similar to earning interest on a traditional savings account. Right. You're earning interest, and this thing's going to pay you out. So, interesting. SUSD offers instant redemption back to USDC, addressing the liquidity concerns often associated with real-world asset holdings on-chain. Additionally, according to Solaire's blog post, SUSD can be used as collateral for proof of stake, consensus mechanisms, adding an extra layer of security to decentralized networks like Solana and Ethereum. Stablecoin should be user-owned. So these are different. This is interesting. So this isn't them just printing a bunch of stablecoins and then shooting them out there. Right? These guys are saying that it should be user-owned. So what? We, the users, have to mint them or something? Anyways, look. The creators of SUSD, Solaire Core, said they envision a future where crypto and traditional finance seamlessly integrate. Most stablecoins are tethered completely to traditional banking infrastructure. Right, that's what I told you, right? Those guys, like regular Tether and all the other coins, they buy and sell bonds all day to keep their stablecoin pegged. So here's the US dollar, here's some sort of dollar stablecoin. So when the dollar moves, they buy. When they said they sell, like that. So that's how stablecoins really work. And so these guys are getting into they're saying most stablecoins are tethered completely to traditional banking infrastructure, drifting away from crypto's core promise of individual freedom. Individual freedom. All right. To create the ultimate open internet platform, stablecoins should be decentralized and user-owned. So they are saying decentralized. They're an automated asset that no one can create, destroy, or freeze besides the user. So we, the users, are going to make these coins. If you want them, you can go make them. Put up a little bit of money. You'll make them, plus you'll get rewarded. Like they said up here with the yields. I'd like to know how often do they pay these yields out, right? Right? So you're going to earn a portion of the yield, it says right here. Yeah, how often? How often are they giving you the yield money? That'd be interesting. Like weekly? Daily? Monthly? Like what? Anyways, this is kind of interesting. Stablecoins take center stage. So once a niche asset, stablecoins are now in the spotlight due to their increasing global adoption and various use cases. Exactly. You guys remember, like you guys who've been here long, who were here like 3-4 years ago, you remember I used to be like, fuck stablecoins. That's a bunch of bullshit. Who fucking wants that shit? They're just going to make CBDCs. Who needs a stablecoin? Right, I used to talk a lot of shit. I talked a lot of shit about stablecoins, didn't I? But and then you heard last night's show, I was singing their praises, right? I mean, once you begin to understand the possibilities, then these aren't bad at all, right? Yeah. If you're new to this channel, I used to talk a lot of shit about stable coins. Be like, who the fuck wants that shit? Right? We'll just have CBDCs, which will actually be, and CBDCs are real, central bank digital currencies are coming, and that's going to be a tokenized representation of your money, of your dollar, your euro, your British pound, your Canadian dollar, whatever country you're in. That's actually going to be real money, but in digital form, like in terms of like you can put it on a ledger, probably is what's going to happen. But yeah, so I used to talk shit about stable coins, like who gives a fuck about stable coins, because CBDCs are coming. But what is good about stable coins is that, just like he says here, they're not controlled by a central system, treasury department, or whatever in your country it's called, right? And there was a guy, one of our brothers, his name is J-Will, Justin Williams, and he had mentioned to me once about how like with a CBDC, the government knows who owns that CBDC, and so if you're like a protester, like, and then what he brought up was China, or I think something like that. Like if you're in China and all your money is in digital yuan, right, a digital CBDC, and you start protesting for democracy, well, the government knows that you own those and they can turn the money off. Yeah, so you just don't have any money anymore, just in one day, just beep, by the press of a button, right? And that really got my mind kind of like, oh, these CBDCs aren't so, I mean, it's scary, it's spooky, right? If your government doesn't like you, they'll just turn off your money, and all right, there you go, fuckstick. Keep talking shit. Yeah, keep talking shit. Next, we're gonna come arrest you, right? We'll disappear you. So that's the beauty of stablecoins. It's not controlled by any central regime and any sort of central regime, and so no one can turn off your money, right? CBDCs, they'll be able to turn off your money, is how our brother said it. And it makes sense, because it will be centrally controlled. They're going to know who owns what dollar, right? Who owns what CBDC. But with these stable coins, these like the Tether and the USDT and all of these, nobody controls it. So no one can turn off your money. And like I said yesterday, it's great, for instance, now let's go back to the China example I just said. If you're in China and you're protesting for democracy and the government's out to get you, you know what I mean? They raided your house, but you weren't home. And your neighbor says, hey, man, the cops are just here looking for you. You better get out of here, right? You just go grab your ledger. It's got your stable coin on it. Fucking cross the border. You know what I mean? Head to Vietnam and escape before they get you. And you got all your money on a ledger. Man, like I said yesterday, with a ledger, a laptop, and a passport, and a debit card, a debit card connected to some sort of crypto account. So I said Coinbase. Like I'm at, here in America, right? If shit goes down and you got to escape with a whole bunch of stable coin on a ledger, your laptop, and a Coinbase debit card, and a passport, you can go anywhere in the world and always have your money, because it'll always be with you on your ledger. No one can take it from you. No one can freeze your bank account. And you can just, take out as much as you want through Coinbase, put your stable coin onto Coinbase, which is attached to the card, and now you can spend money in whatever foreign country you're in. And so, I don't expect anyone watching this channel to have to escape from their government or anything, but if you have to, ledger, laptop, debit card from some sort of crypto place, and a passport, and you're free. All right, so anyways, though, blah, 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 blah. So, yeah, according to Artemis, the demand for stable coins continues to surge, with daily transaction volumes exceeding $66 billion. Marking a 73% increase, blah, 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 blah. All right, who cares? But Bang. So there we go. So first of all, so Solana hodlers, bang. This is a nice little, I don't know if it's called an onboarding, but someone's using your blockchain to actually do something. So that's great. And this is an interesting stablecoin in that it looks like the users, because that's what he says here, right? It looks like it's there, but the users make the tokens. In other words, if you want tokens, pay a little money and boop, it'll give you that amount worth of this stablecoin, right? So $20, it'll give you $20 worth of this. Where did it say that? Yeah, like with a minimum entry of $5, it says, right here. Bang! Anyone can access SUDT. So you put $5, they'll give you $5 worth of this. So interesting. Looks like they're going to put gold and oil in it. Like I said, the gold part, I get that. The oil, with all the trouble in the Middle East, I don't know. But bang! All right, let's move on to the next story, everybody. Look. Okay, and we'll get through this fast because this isn't. So, a new bill is introduced in Parliament to clarify crypto's legal status. So, this is important. Pay attention to this story because it's going to apply to the next one I'm about to read to you about the hedge funds. So, this is hold on, let me get a sip. So, this is in the UK. This is actually the UK government website. See it over there, gov.uk. And so they want to clarify crypto's legal status. And that's what's necessary, regulatory clarity. If I'm a hedge fund, well, and I want to buy Bitcoins and stuff for my clients, well, or my clients ask me to buy it for them, really is how it goes down. Get me into Bitcoin, you motherfucker, come on. Is what you tell your hedge fund manager, come on. You know, we're wasting time. So we're going to be late. But your hedge fund manager probably says like, nah, I can't right now because I don't know the legal status, right? Like here in America, Bitcoin is legal, so that's fine here. But in other countries, or maybe someone wants to get into Solana or Morpheus or, I don't know, Chainlink, they can't. Or, well, the hedge fund manager can't get it yet because it's not regulated yet. They do not know its legal status yet. How much tax are they going to have to pay? What form of custody do I need to have? Blah, 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 blah. There's a lot to go into just offering crypto to your clients. And so it's these kind of bills, and that's what we need here in America as well, as regulatory clarity, which lays it all out. Okay, these are the rules. This is the this is the that, that. Right? These are the taxes you're going to have to pay. This is the level of custody you're going to have. I don't know, maybe this is the kind of insurance you're going to have. You're going to have in case customers are, something happens to their crypto. You got to be able to pay them back. Blah, 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 blah. All right, so let's start. Tech-savvy owners of Bitcoin and other digital assets will benefit from greater legal protections thanks to an important clarification to the law. So Bitcoin, so this is how it's going to be in Europe. The UK and Britain. Bitcoin and other digital assets can be considered as personal property. Bang! Owners to benefit from increased legal protection. Changes will keep English and Welsh law at the forefront of the global tech industry. So I hope you're paying attention, Elise. Bang! Elise! That's our girl from Wales, our home girl from Wales. She's a VeChain master. Her and her mom, and Elise's mom. Bang! Should give a bang to those two. So the Property, Digital Assets, etc. bill introduced in Parliament today will mean that for the first time in British history, digital hodlings, including cryptocurrency, non-fungible tokens such as digital art, and carbon credits can be considered as personal property under the law. See? Okay. Personal property, okay. Now we know how we're regulating it, right? So the bill will also ensure Britain maintains its pole position in the emerging global crypto race by being one of the first countries to recognize these assets into law. That's what we need. These need to be recognized in law, right? I've said it since the beginning of this channel. That's what we've been waiting for. Regulatory clarity. Previously, digital belongings were not definitively included in the scope of English or Welsh property law, leaving owners in a legal gray area if their assets were interfered with. Exactly like that. If someone steals your crypto, like for instance here in America, if someone steals your chain link from you, well, there's nothing you can do about it, right? Chain link isn't regulated here, so it's like, well, sorry, buddy. I mean, what can I do about it? Whereas if someone steals your Bitcoin here, that's theft, because Bitcoin is considered a commodity here. And so if you own that commodity and someone steals it from you, well, bang, you can charge that person now for theft of that commodity from a person whose ownership. But when you're not regulated, you really don't have the privilege of the law being on your side, being able to say, well, I own this, right? I mean, you might own it. You own Chainlink, fine. But by law, we don't recognize Chainlink as a thing. So if someone steals it from you, it'd be like someone going into your backyard and taking a leaf off one of the trees in your backyard, and then you telling the cops, like, hey, man, that guy stole a leaf from my tree. The cop's like, yeah, well, that's not considered theft. It's just nothing. Leaves aren't regulated, right? You know what I mean? If they chopped down the tree and took it, okay, trees are regulated, but the leaves on them aren't. So do you get what I'm trying to say? And so that's why we want regulatory clarity, because it gives consumer protections, right? It gives consumer protections. And, for all of you who've been here and if you're new to this channel, I'm all about consumer protections. When I first started trading Forex, if you're new to this channel, I'm a Forex trader, right? That's what I do. My money makes me money. I don't have a 9-to-5 job. Look at me. Look at me. Yeah, look at my hair. I haven't even cut this shit for a month. Look at my face. I can't go to work like this. Yeah, well, I don't have to go to work. My money goes to work for me, right? I don't go to some fucking 9-to-5 fucking job, right? And I can tell you that, when I first started trading Forex back in the days, it was the Wild West. Motherfuckers were getting their money stolen left and right. And there was nothing you could do about it. There was nothing you could do about it. It was like tough, right? But then the Forex laws came in, the trading laws came in, and now if some Forex company tries to steal your money or something, well, now, bang, you can charge them, right? If something is not in the law, then it's not a thing. Do you understand what I'm saying? Like, if there's no law or declaration of what that is, then you don't, as a consumer, have any rights to repercussion. Do you understand? All right. So, the new law will therefore also give legal protection to owners and companies against fraud and scams, while helping judges deal with complex cases where digital holdings are disputed or form part of settlements. For example, a divorce case. Right. Justice Minister said, our world-leading legal services form a vital part of our economy, helping to drive forward growth and keep Britain at the heart of the international legal industry. It is essential that the laws keep pace with evolving technologies. And this legislation will mean that the sector can maintain its position as a global leader in crypto assets and bring clarity to complex property cases. Right, clarity. Once this passes, if someone steals your Ethereum or your Chainlink, all right, you could charge them. Or you can go to the cops and say, hey, someone stole my shit. They'll investigate and arrest them. Whereas now, if you tell the cops, hey, man, someone stole my Ethereum, they're like, yeah, well, so what? Like, Ethereum's not a thing here. It doesn't have legal standing here in this country, right? Okay, so today's news also means that the UK legal sector will be better equipped to respond to new technologies, attracting more businesses and investment. All right, we're going to skip a little bit. Blah, 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 blah. All right. Oh, so here's an interesting, let's read this part. So digital assets is an extremely broad term, encompassing a variety of things, such as digital files, digital records, email accounts, digital carbon credits, crypto assets, and NFTs. The Laws Commission recommendation only apply to the subset of digital assets, of which the main one is crypto tokens. So this is specifically for crypto tokens. Now, currently, there are two categories of property: things in possession, e.g. gold, money, cars, and things in action, debt and shares. This bill introduces a third category of thing to allow for certain digital assets to attract personal property rights. So now your crypto is going to have personal property rights. If someone steals your Ethereum from you, they've stolen your property and you can prosecute. There's that. Whereas right now, your Ethereums aren't a thing. Your chain links aren't a thing. I mean, here in America too. I mean, not to scare anybody, but it's the truth, right? They're not a thing yet. Like your Bitcoin and Ethereum in America are a thing. If someone steals them, you can get them prosecuted. But if someone steals your Chainlink, your VeChain, your IOTA, your Stellar, whatever, nah. And so this does exactly that. It allows certain digital assets to attract personal property rights, right? So now you're protected. And that's why whenever you hear people say, oh, the government's regulating, yeah, we want them to regulate. If you're smart, you want them to regulate because you want to have legal protections over what you possess. Cryptocurrency, you own it. Well, you have it, but right now it's not a thing. But once it's a thing, well, people will be prosecuted for stealing it from you, right? That's why, you always ask, man, these guys are rug pulling. They do rug pulls, but no one ever gets arrested. Yeah, well, because they're not a thing. If I make up Shomari coin and fucking a bunch of you out there put 50 million into it, and then I just rug you all, there's nothing illegal about that. It should be illegal. Of course it should be, but it's not because you didn't own anything. I don't know. You just gave the guy money for some tokens and he took off with it. Like, so what? Right? Whereas under new laws, if you do that, so now under the British law, if I make a Shomari coin and you buy it, well, it's property. And then if I rug you, well, now you've got legal repercussions. All right, so there we go. And this story relates to what I'm about to read to you. So that's why you want to hear, guys, everybody out there watching this show, is you want to hear that your government is giving you legal protections for your cryptocurrency. Legal protections for your cryptocurrency. All right. And that is why, and when we get legal protections, well, this happens. Bang! Golly. This is what happens. Hedge funds start warming up to digital assets. Bang! Right? Because hedge funds want to be protected too. But really, they don't really give a fuck about protection because they have the best IT guys anyway. No little crypto nerd's going to hack a hedge fund. But, a hedge fund's IT guys, they get paid like $1 million a year. You know what I mean? Like, their IT guys are the best of the best of the best of the best. But so I'm not worried about them getting hacked. But what does matter is, again, they want regulatory clarity. What sort of insurance do I need? What level of custody do I have to offer my clients? Blah, 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 blah. How much taxes or just whatever, just different stuff. All right. So hedge funds are aggressively increasing their exposure to cryptocurrencies. Bang! In a move that experts attribute to clearer regulations. See this? Bang! Clearer regulations. Right? Just tell us all about it. Tell us what the implications are. And then they come in, right? They get the lawyers. The lawyers look over the new laws. Can we make money doing this? Can we make money doing that? If it's a yes, then it's a go. Right? That's how the financial system works. Like you have to remember in 2004, ETFs came out, right? ETFs weren't a thing. And then in 2004, QQQ came out, right? And SPIDR came out, SPIDR, right? And it was the brand new instrument, this thing called ETFs. And once they were regulated and everything, well, look at the ETF market now, right? ETFs are a new financial instrument, and Digital assets are a new fucking whole asset class and financial instrument. And so they have to be regulated. And so the big guys can come and operate with it and offer it to their clients and make money from it and in a legal fashion, right? Which helps us. All right, so look, around digital assets and the launch of spot cryptocurrency exchange traded funds, ETFs, in the USA and Asia. A new study by the Alternative Investment Management Association and PricewaterhouseCoopers reveals that nearly half, 47% of hedge funds focused on traditional asset classes now have exposure to cryptocurrencies. Bang! Of course they do. They're already starting to expose themselves. Right? Bitcoin and Ethereum are regulated. Bang, we're getting in. And as soon as regulatory clarity comes for the rest of these altcoins and stuff, they're going to come get those too. So, hodl. You're going to be rich. You are going to be rich. Trust me, it just takes time. It takes time for these laws to pass. It takes time for these, hedge fund guys to build up their, offer a new product to their clients. Yeah, this is the crypto fund or this is the, it takes time, but it's all coming. It's all coming. Slowly, but it's coming. Additionally, the report notes that all traditional hedge funds currently involved in cryptocurrencies plan to either maintain or increase their positions. None indicated plans to reduce their exposure. Exactly. We're in. They're all in. All right, like I've told you guys from the beginning of this channel, there is a tsunami. Hey, there is a tsunami of money waiting to come to this space. It's just got to be legalized and regulated first. They want in. These companies are real. Chainlink is real. I read to you yesterday. Chainlink and Swift just integrated, right? Not a side hustle, a full integration. Yeah, well, you'd think they don't want to invest in Chainlink? They're not stupid, right? Right? You think we're the only smart ones who know? You know what I mean? You think they don't want to invest in IOTA, who's got all the government contracts with the European Union? They're not dumb, right? And so no one's decreasing anything. So 67% of these funds intend to keep their crypto investments steady, while the remaining 33 expect to increase their exposure in the near future. The findings from this year, so here's a quote from some guy. The findings from this year's report indicate a steady recovery in confidence over the past year, says James Delaney, Managing Director of Asset Management Regulation at AIMI. It's really the regulatory clarity. There's the words that I've been preaching for how many years, brothers? Bang! It's the regulatory clarity that we started to see globally. That clarity. That. Hold on, let's bang it. Bang! 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 That clarity is definitely boosting confidence in asset class. In the asset class, exactly. Bang! Right? That's the clarity. They need the clarity. These guys want in, but they don't want to start offering stuff to their clients and then they find out that they're doing something illegal, right? And so that's what's boosting the market. It's stuff like this bill that I just read to you right here, right? It clarifies the clarity of the legal status and everything. All right. So despite the surge in interest in digital assets, some hedge fund managers remain on the sidelines, with 76% of those that are not currently invested in cryptocurrencies indicated that they're unlikely to change their stance in the next 3 years, up from 54% in 2023, according to the survey. First of all, you have to realize a lot of hedge funds, they are in niche markets. So if I'm a commodities hedge fund, I really don't give a shit about Bitcoin. Right? And if my clients want it, I tell them, well, go somewhere else. Go to another guy and he'll get it for you. You know what I mean? Like, there's hedge funds out there that invest in only gold, lead, zinc, copper, commodities, right? And they make billions of dollars a year. So it's like they don't need Bitcoin. They don't need crypto. And their clients don't need it. They make enough money for their clients already. You know what I mean? So you have to remember that. Crypto's new and it'll make money, but remember, these guys are already making money. So it's like, a lot of them don't give a fuck. So look, in terms of the methodology, the survey involved close to 100 hedge funds with an aggregate of 124 billion in assets under management. 42% of the funds surveyed invest in traditional assets, and the rest were focused on crypto, more than 50% portfolio exposure to crypto. The survey was conducted in the second quarter, soon after Bitcoin hit its all-time high in March. All right, stable coins. I don't think we're going to read this. In terms of strategies, the hedge funds are applying to gain exposure. These funds traded derivatives while 20 traded tokens. All right. We're not going to read that. So another key. All right. Should we read it? Nah, that's not important to what we're talking about here. So meeting institutional demand. Another key finding from the report is the growing institutional demand for cryptocurrencies. By the institutions. That's what we need. That's what I've told you on this channel from the beginning. There is a tsunami of money waiting to come to the space. They want in. They want in, a lot of them. Not all of them, but a lot of them. Well, let's put it this way. Enough of them want in to make us fucking rich. Okay? Let's just break it down into the true level. Right? I don't give a fuck if all of them want in. Just enough of you motherfuckers to get me rich. Right? And I'm sure that's your sentiment as well, right? You know, who gives a shit? I don't give a fuck if that guy doesn't want in. Do you want in? All right, let's go. All right. So another key finding from the report is the growing institutional demand for cryptocurrencies. Respondents reported a rising interest in digital assets from institutional investors, with 2/3 of all hedge fund managers surveyed noting increased interest, right? Because you have to understand, when you're a hedge fund, right, I've got clients and da-da-da-da, and I've got my trading desk, and we're doing what we do. But, you know, clients will call you up and be like, hey, Johnny, all right, maybe I have a Shomari fund. Imagine I'm the hedge fund guy. You know, hey, Shomari, how you doing? Oh, I'm good, man. What are you? Hey, man, there's this thing called Bitcoin out there, these digital assets out there. Is there any way you can get me into that? Right? That's how it happens. And the hedge fund master at first might say, well, right now we're not dealing in any of that digital asset stuff. Yeah, but if a lot of people keep calling him, hey, Shomari, this is Jimmy. I'd like some Bitcoin if you're going to get it. You know, and then someone else calls, hi, this is Susan. I'd like some Bitcoin if you can get it. And another person calls, hey, this is Javier. I'd like some Bitcoin if you can get it. Right? When he keeps hearing that, he's like, oh, well, I can make some money. These guys want Bitcoin. Well, let's figure out how to get it to them, right? And then they talk to the lawyers and then the IT guys, and then that's how hedge funds work, right? Like, the demand is what remember this. Remember in 2019, Larry Fink of BlackRock said that Bitcoin was rat poison. Rat poison. I Google it. I Google it, and also I reported about it here. Yeah, he's not saying that now, is he? Yeah, he fucking started a fucking daggone Bitcoin ETF, spot ETF even. Right, because he got harassed by people like, hey, man, Larry, dog, what's this shit Bitcoin, dog? I want in. I want in. I want in. I want in. All right, you guys want in? I'm going to get you in. We'll build a whole ETF for you, motherfucker. Daggone. Stop bothering me. That's how it really works. That's how it goes down, right? And so, you know, they're getting, like it says right here, the fund managers, all the hedge fund, it says right here. Whoops. Sorry. It says all the hedge fund managers surveyed noticed increased interest. Yeah, because their clients are calling them. Get me in. Man, this shit was at 40,000. It's at, what are we at now? It's at 72, man. Fuck, man. Come on. Right? They're feeling pressure from their clients. If you can't get me in, I'm going to take my money. I'm going to bring it somewhere else. Someone else who can get me in. You're pissing me off. Right? That's how it goes down. People are serious about their money. And if you're my asset manager, well, I want you to fucking get the assets I want, right? That's why BlackRock is the shit, right? Because they can get you anything, anywhere. They're the ultimate, right? They can get you anything, anywhere, right? But regular hedge fund guys don't, obviously, they're not powerful like BlackRock. They don't have the network of people worldwide and shit. And so people get harassed. They harass their hedge fund manager. Come on, dog. Come on. Get me in, man. Get me in. You know, if you can't get me in, fuck, I'm taking my money somewhere else. I need in now. And that creates the FOMO, right? Because the hedge fund manager doesn't want to lose customers, right? So they fucking, okay, hold on. Right? They call the IT guys, come on. Let's figure it out. Call the lawyers. How do we get to do this? All right? That's how the banking and hedge fund world works. Just like that. You call the motherfucker and tell him, I want this shit. If you can't get me this shit, I'm going somewhere else to someone who can. Oh, don't worry, Mr. Clarke. Don't worry, sir. Just give us a few weeks. Give us some time. We're working on it. We've got our guys working on it. All right. You got a month, man, and then I'm out of here. All right. So that's how it works. Anyways, so when analyzed by hedge fund types, notable differences emerge. So a significant 85% of digital asset hedge funds, those whose exposure to crypto is over 50% of the portfolio value, have reported increased interest from institutional investors compared to just 43% of traditional hedge funds. All right. So Edward Chin, co-founder of the Parataxis Capital Management, an investment firm focused on digital assets, argues that the prospect of enhanced returns is one of the main reasons why hedge funds and institutional investors are increasingly warming up to crypto. Of course, look at today. Look at fucking today. Right? Of course, the gains, the returns, your ROI, the return on your investment is massive. Look at Bitcoin in the past 2 days. I know it says 7 days, but trust me, this is only the past 2 days. Is up 7.8%. Yeah, there's no stock, no bond that's going to pay you out that much in a 2-day span. Now, obviously, we all know the other side of it. Bitcoin can lose 7%, 10% in 2 days as well. So it's a very volatile asset. That's why it's, a risk asset. It's the riskiest asset. All that talk about a hedge against inflation, that's a bunch of bullshit, right? Because this thing can lose a couple thousand in a day. And so, which is obviously inflation, right? Losing its value. And so it's not a hedge against inflation, but it is definitely an opportunity to make some mad gains, right? Your 401k, if you out there who have a 401k, yeah, look at your Microsoft holdings, look at your Tesla holdings, or stocks. Forget 401k, but just you out there who own stocks. In the stock market, if a stock goes up 9% a year, oh, that's a big deal. It's a high flyer. This is a high flying stock. 9%. Motherfucking crypto goes up 9% sometimes in an hour, depending on the token you're talking about, right? Like, let's look at, hold on, let's get back to the crypto chart here. So let's look at the top in the 7 days, past 7 days. Yeah, Dogecoin up 26%, Radium up 24%, Popcat up 20%, Thorchain up 16%, Pith Network up 10 and change, and Sui up 8 and change, right? You don't get gains like that in the stock market. Yeah, you get gains like that. 27%, yeah, over 2 years, right? Your Tesla shares will go up that much maybe in 2 years. Yeah, this was in the past 7 fucking days. And so everyone's chasing those gains, right? Everyone wants the sweet returns, the ROI. The ROI, return on your ROI means, sorry, my brain froze right there. ROI means return on investment. What's my return on this investment going to be? In other words, how much profit am I going to make, right? And your ROR is your rate of return. Well, how long is it going to take me to make that profit? So, for instance, if you just invested in Dogecoin last week, well, you're up 27% now. So the ROI was 27 and your ROR was 1 week. How long is it going to take me to get 27% gains? Yeah, about a week. Yeah, well, look at your Tesla shares or your Microsoft shares. How long is it going to take me to get 27% gains on my Tesla or Microsoft shares? Yeah, might take you a year or two. Or more. You see what I'm saying? So everyone is hungry for the returns in this space, right? Oh my gosh, that's so funny. And it's not just the ROI, but it's the ROR. How fast am I going to make that money? Will you make 27% on your money with Tesla? Sure. Yeah, after a few years. Or are you going to make 20% off Doji? Sure, maybe by next week. See what I'm saying? You put $100,000 in Tesla, 27% would give you $127,000. It's going to take you 2 years to make $127,000. If you had bought Dogecoin last Friday, well, guess what? You're at $127,000 right now. And we're only in the middle of, it's only Tuesday. Yes. That's why you're going to be rich, guys. Trust me. You are going to be rich. Just hodl, stay strong. It takes time. It's taking time. But look, the juice is worth the squeeze. The juice is worth the squeeze. Be patient. Just be patient. It'll take time. But this juice is worth the squeeze. It's worth the wait. It's worth the wait. I mean, how are you going to make money like you're going to make in this space anywhere else? All right? Unless you're a master trader or something. All right? So just hodl. The juice is worth the squeeze, folks. It's worth the wait. Okay. So simple market neutral arbitrage trading strategies that generate mid to high single digits returns in traditional asset markets can yield up to 20% to low 30% type returns, right? Like, again, they're just saying that the returns here in crypto land is just massive compared to the traditional markets. When they say traditional markets, they mean, stocks. So he pointed out, hold on, let me have a sip. So he pointed out that one major challenge for hedge funds and institutional investors, however, is deploying large amounts of capital in a market that remains significantly smaller than traditional assets. And that's the truth. This is a tiny, tiny little market. I mean, we're only $2.43 trillion. So if you deploy large amounts of money, well, you can disrupt price, right? Even if you're getting it OTC, this market is so small that even if you're buying your shit OTC, if you're out there, so OTC means over the counter, you're negotiating price. It's not the spot market. It's a kind of behind the scenes market of people who are buying in bulk, right? It's a place where people buy in bulk. And so even then, you could move the market a little because, it's such a small market. Big names are scooping up Bitcoin. So the launch of spot Bitcoin ETFs has been pivotal in convincing many hedge funds to increase their exposure to cryptocurrencies. Excuse me. Since the SEC approved spot Bitcoin ETFs in January, total trading volume across all issuers has exceeded 350 billion, nearly 2 billion a day. AMI and PricewaterhouseCoopers note in their report. So BlackRock's IBIT ETF has notably become the first ETF to reach 10 billion in assets in less than a quarter, achieving this milestone in just 49 days. The Bitcoin ETF was the most successful ETF launch in over 30 years of data and 5,000 ETF launches. This statistic alone should make any allocator stop and reflect, right? If you're a hedge fund and your people want in, you should, maybe I'll just get some of these ETFs for my people. So Millennial Management is here. Renaissance Technologies is here. We're not going to read every word. We're going to sort of skip a little bit because this is long. Blah, 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 blah. So hedge funds are coming. Hedge funds are here and they're coming. Another major backer of Bitcoin is BlackRock CEO and chairman Larry Fink. So remember, I told you that. In 2019, he was like, fuck Bitcoin. That's a piece of rat shit. Or, sorry, what did he call it? Rat poison. Not rat shit. Rat poison. And I did a story on it way back in 2019 where he said, he said something like, none of my clients are asking for it. Yeah, well, then they started asking. Like I said, hey, Larry, can you get me in? And he's like, oh. And enough started asking that they even built a whole ETF around it. So he says that we believe Bitcoin is an asset class in itself. It is an alternative to other commodities like gold. As I've always said, it's just a digital brick of gold. It's not just Bitcoin and other cryptocurrencies that are attracting increased investment. Exposure to crypto firms. Oh, so they want to invest in the actual firms themselves. Anyway, so bang. So there you go. That's why the the hedge funds are coming because just like I told you here, regulatory clarity. There is now regulatory clarity is coming, which clarifies the legal status for them. And so now, as their clients ask for it, well, once these regulations are passed and in law, then once their clients come and ask, hey man, can you get me into Chainlink? Hey man, can you get me into Solana? Hey man, can you get me into whatever, I don't know, VeChain? They'll be like, yeah, we can get you in. How much you want in, right? And so that's what's great, and that's what we need, the institutional money, big money, big money coming in, driving up the prices and creating scarcity. All right, so let's get to the shout-outs. Booyaka, booyaka. Oops. Let's get into the shout-outs. All right. BDM. Look, Truffle Pig. Love you, brother. See you, brother. Bang. DP Entertainment. So, brother. Love you, brother. See you, brother. Bang. Grudgeable. Yes, the IOTA Master. Focus. Follow one course until success. I love that. Love you, brother. See you, brother. Bang. I always like reading that when I bang him. Slappy. Holding down our insurgency in the Great White North. Look. Love you, brother. See you, brother. Bang. Keep bonking. Oh, he's bonking, motherfuckers. Trust me. All right. That's everyone for today. Let's get back to the Death Star. Bang. Welcome back, everybody. All right. So we had a great show for you today. And I hope you really took in the regulation part. Like, I hope you really understand how important regulatory clarity is. That, without regulatory clarity, we're not going to get the big money we need. Right? Period. I mean, they can't invest their clients' money in this space in an unregulated, unlicensed space, right? That's how hedge funds work and everything. It's not the Wild West like a lot of, I don't know, soccer moms and dads think, like as if these guys can just do anything. They are the most regulated fucking shit on earth. Pretty much. Right, they probably regulated more than the car safe, than the safety features on your car, man, because it's people's money. So, they're regulated out the ass. And so they can't buy this stuff for their clients, until there's regulatory clarity. And so, all right, let's go to the stories. Let's summarize these and get the hell out of here. So Solaire is offering real world asset stablecoin on Solana. So that's interesting. They have a stablecoin right now. It's just got the treasuries, the bonds in it. But it looks like they're going to add some gold and, what was it? Gold and, oil. Oh, fuck. I don't know about the oil part, man. The gold part's nice. But not with all the trouble going on in the Middle East right now. Fuck, one wrong missile and fucking oil might go up to fucking $200 a barrel. But anyways, it's very interesting. And it looks like you're just paying the money and then it gets minted for you. Nice and quick and easy. They had that whole thing that they want the customer to own the asset, right? Rather, all right. So cool. And if you're a Solana holder, bang, good for you. All right. And then the new UK crypto regs provide clarity. Remember that word, clarity. Actually, two words: regulatory clarity. Regulatory clarity. Regulatory clarity. That's what we need around the world, but especially in the big economies, right? I mean, the European Union, they gave their regulatory clarity last year, right? The MiCA regs, market and crypto assets regs, and those guys are still building up. It's taking so long. Fuck. But they're getting around to it. The UK, which I'm reading right now, which we talked about tonight, is getting around to it. And America, after these elections, we'll probably get around to it pretty quick because there's already 3 crypto bills in Congress here in America, and they just need to be voted on, I think, right? Because they're out of committee, so they've been debated and blah, 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 blah. So that part's over. And now they're out of committee, and so now it's just up to the Speaker of the House The guy right now, his name's Mike Johnson or something Johnson. I don't remember his name, but something Johnson. And if he brings up those bills for vote, well, let's vote. Let's go. And so we're really close. And same within the Senate. We have a guy, Schumer. He's the guy who controls the Senate here in America. He can bring, I think there's a Senate bill, so he can bring his Senate bill up to a vote, also out of committee already. And so we're right here. I wouldn't be surprised if we get, I'm not saying this is going to happen, so don't get excited or anything, okay? Don't get excited. But I'm just saying I won't be surprised if before the next president is seated, we've got crypto regs, right? It won't shock me. Let me put it that way. Let me put it that way. It won't shock me if when these guys come back into session at the end of, I think, next month, right? Because they still have 2 more months to work, right? The president is getting elected next week, but the president doesn't actually start their job until January 20th. And Congress, the new Congress, so all the new Congress people or the old ones that got reelected, they don't get seated until January 3rd, right? So between the election and January 3rd, these motherfuckers still got to work, right? You just don't get to take the time off, motherfucker, right? And so, right, the election is November 5th. All right, back to work on November 7th, you idiots, right? So it's November, December, into January. So you got about 2 months, about 65, 67 days of work still to do. And so I wouldn't be surprised if and I've told you guys this before, whenever there's a lame duck Congress, so here in America we have what's called a lame duck Congress. The lame duck Congress happens between election time, November 5th, and when the new Congress comes in. Between that time, they call it lame duck. In other words, because some people who are in Congress didn't win their seats, so they're going to be gone. And I guess if you won your seat, you're still there. But what usually happens during that lame duck session of Congress is all sorts of crazy bills get passed. Yeah, all sorts of crazy shit, right? Guys vote for and shit they would never vote for before because they would have to get reelected. But now that, say you lost your seat, you're like, all right, fuck it. I'll just vote for what I really want to vote for. So they just vote for anything. We'll see. Well, I'll do some shows during lame duck, and you'll see. We're going to... That's a fun time in American politics is they don't give a shit. Plus, and if you just got reelected, you don't give a shit. All right, I'm not up for election for another 2 years. So I'll just vote for what the fuck I want. And so I'm hoping. I'm not saying it's going to happen, but I am hoping that during this lame duck Congress, Johnson calls it up for a vote in the House, and Schumer calls it up for a vote in the Senate, and Biden signs that shit, and let's roll. So we'll see. All right, so hold on, though. All right, so we were talking about the UK bill. So that provides clarity for the UK. And, the UK is the second largest economic place in the world, right? The 3 largest financial hubs in the world are New York, then London, then Tokyo. So America, Britain, and Japan, right? Technically, right? And so with the UK having clarity, that'll be great. There's a lot of money in the UK. A lot of money. I mean, think about it. A lot of old money. A lot of old money. I mean, families, just old money, from the colonial days when they were raping and pillaging other societies, right? Well, there's a lot of money still. And so when the British come online, boy, oh boy, it's going to be sweet. It's going to be sweet for us in crypto land. All right. And then let's get to the final story is, why are the hedge funds coming? And again, it ties into what we read about the British just now, regulatory clarity. All right, what'd the guy say? He's like, yeah, man, people want in. People want in. They see the returns here. They see the gains here. They want a piece of the chicken, right? Sometimes in life you get the chicken. Sometimes you only get the feathers. Well, when you see fucking chicken like this, you want a piece. Gains like this, right? Like I showed you with the Dogecoin. Doge just went up 24% in a week. Yeah, well, your fucking Tesla shares aren't going to do that for a couple of years. So, what do you want? You want these returns now? Your ROI? You want it fast, ROR, rate of return. I want it fast. I want money right daggone now. And so this is great. Hedge funds are ears all perked. And like they said, like we read, the guy said, what's giving the hedge funds more oomph, more desire to get in here is because, okay, well, now they got clarity. Well, they're getting clarity. They're getting clarity. In Europe, they have clarity. In the EU, there's clarity. In China, there's clarity. America, Britain, Canada, Australia, New Zealand, Japan, South Korea. These are the names we want to get clarity. Well, especially America, obviously. Once we get clarity here, because you know how Americans are. These are the most money-hungry savages on earth. They're going to have investment vehicles like crazy here. Like, it's not going to be like Europe. Like, Europe got their MICA regs last year. Was it last year or the year before? Yeah, last year. Right? June 1st, wasn't it? Right? When China and Europe came online the same day. June 1st last year. Yeah, they haven't done shit. Yeah, trust me, when America comes online, Americans are savages. They're going to kill it. And so we are going to be fucking rich. And so say your prayers and hope that we get that regulatory clarity during this lame duck session. Would be beautiful. Would be so fucking beautiful. All right, so on that good note, but we're going to get the clarity eventually, so don't worry about it. But I'd like it during lame duck. All right, so on that note, let's shill it and kill it. Bang! Let's get you back to your wives and lives. Look, subscribe below and press the bell. You'll get an automatic notification when I do this show, the greatest show on earth, the greatest show in the multiverse. My name is Shomari Clarke, and I love talking money. Bang! And I love talking crypto. Bang! This is the favorite time of my day. So thank you for having me in your home, and I'll see you all next time for another fun, fact-filled day of crypto talk. But until then, subscribe here and press the bell. Oh, and also press the thumbs up. Watch that video over here and get your mind right, and I'll see you all next time. My name is Shomari Clarke, always watching our money. And lucky for you, I'm always on duty. Look, Shomari Clarke. Bye. Yes. Over and out.